Hello and welcome to the Positive Property Show.
Welcome,
Hello,
everyone.
Charmaine.
Hi, George. Lovely to see you today. Or should I
Excellent.
say tonight? I think it's night.
Exactly. What I was going to say to everyone is if you're watching live, type in hashtag live so I know that you're here. We're going live. We're on Restream Studio. So we're live in about 5 different channels. But our main group is the Australian Property Chat on Facebook. Now, we're going to be talking about getting investor ready.
Yeah, it's a very important topic and how to get ready in the first 60 days because you really want to take action and get momentum, quick, smart. And George and I are going to cover all the details on how to do that.
Exactly. And this is what I want to talk about. What I'm going to do is before we go investor ready, I'm going to quickly talk about what's been happening in the property market and Australia, as I normally do at the beginning of the show. And then we're going to get right into it and talk about getting investor ready. But what I want to mention, the reason you want to get investor ready and you really get your ducks in a row is this. The reason is because interest rates are about to go down. The Fed has dropped the interest rates by 0.5%. A few of the major banks in Australia have already dropped their long-term interest rates, their fixed-term ones, the long ones.
Right. Which is I was going to say, which is usually a leading indicator.
It is. And look, the Fed, this American Fed is a leading indicator because what we do is we do what they do, right? Now, the fact of it is, if you have been living on a rock, you probably don't know this. But when interest rates go down, because of the demand and supply issue at the moment, because we've got too much demand, not enough supply, there's going to be a massive property boom. And the reason you want to get investor ready is get your ducks in a row and get ready before this happens. So if you're watching tonight's a really important lesson to learn and you really need to pay attention. But let me share my screen and just show you what's been happening in the world of real estate, the economy, and everything else like that.
Oh, fantastic. This is good because this is where the juice really is. And this is what gets me excited every day, especially when it comes to buying property.
Okay, yep. So get investor ready in the first 60 days. The apartment collapse is demolishing Labor's housing target. So if you look at dwelling approvals Australia, right, we look at houses, we look at units and apartments in total, we can see that units and apartments is way down.
Yeah.
And traditionally, what we rely on units and apartments to sort of help us fulfill the demand and supply issue when it comes to property. And units and apartments have been doing this very well for the last 20 years. But there's a big issue. They're not building a lot of units and apartments anymore. Way less apartments and units than houses. And part of the reason is most Australians, they want a townhouse or a house, right? Or a boutique unit. They don't like high rises. But with all the immigration we've got, we need the high rises to house everyone. And that's the issue. And we look at this here, right? You look at detached houses is the red up the top.
Yeah.
Then you've got townhouses. You can see there's as many townhouses being approved as there are high rises, and low rise, hardly anything at all.
Yeah, wow, there you go.
Yep. So I'll tell you what this graph means. This graph is saying a few things. What it's saying is, one, people prefer houses and townhouses to apartments. Two, there's going to be a massive undersupply. Three, low-rise apartments, there's not many of them. So low-rise apartments are actually not the same as high-rise. And we need to really have a distinction.
Yeah, can you explain to us what the definition between the both is?
Yeah, a high-rise is a big tower in the middle of the CBD or Docklands, right? A low-rise is a boutique group of units like, 2 stories, 3 stories near the beach or somewhere individual.
Mm-hmm.
And they're very different. And while I tell everyone, stay away from the high-rise, unless you're the developer, that's the only people that make money out of them. But the low-rise is different, and low-rise can actually be quite lucrative if you buy smartly. It's just like houses, townhouses, and low-rise. there's a lot of good bargains to be had. But you still need to know what you're doing, because some of them, a lot of them are still going to go down and not going to go up.
Yeah.
Australian apartment approvals, look at that.
Wow. It's going down.
Gone way down. High-rise apartment approvals, national, WA, Victoria, Queensland, it's all gone down.
Yeah, you can see that quite clearly.
Yeah, it's a massive shortage because we had a massive boom of high-rises back in 2014.
Yeah, you can see that 2014 to 16, it looks quite high on the graph.
Yes, and back in 2012, I was actually warning everyone that there was too many high-rises. And I was on my high horse telling everyone, don't buy them, because when people bought high-rises then, they dropped. Now, for example, you could have bought a high-rise apartment, like a penthouse, for $4 million in 2012. By 2014, it would have halved in the price. I know this because I've seen it happen in real life to people.
Yeah.
And I've warned people, don't do it. Because everyone was getting into the whole penthouse thing and buying sub-penthouses and penthouses going nuts and spending a lot of money. And I couldn't see the intrinsic value of something perched on top of all these other units to be worth that sort of money. Now, construction costs have gone up as well, which has made high-rises more difficult to build. And you can see apartments. And look at this. Australia faces deepening social housing crisis. So we had 4.6% of housing being delivered by the government. Now it's down to 4.1.
Wow, it's quite a significant drop, isn't it?
Well, look at public housing share of construction in Australia. Back in 1956, 22% of houses, 1 in 5 houses, was built by the government. You look at now, it's gone down to 4%. So 1 in 25 houses. So what does this mean? The government has lost the ability to create houses. It literally has lost the ability. You can't do it anymore. Where back in 1956, they were very good at it, right? And you look at public housing completion versus population change, right? And you look at the public housing, that blue line, 1955, and see how it was always way above the population change.
Yeah.
And then now it's way below.
So what are the factors that's causing the government to decline in that, George? Like, is there anything, any metrics or anything?
Well, look, the government has had bad policy after bad policy after bad policy, right? They really don't know what they're doing, which is evident. And the problem is when you've got people who don't know what they're doing, it makes it difficult. So, and you look at a net overseas migration, look at our normal migration, which is normally about 100,000 a year, and look at what we've got now, projected, much higher. And you look at our population, it's going to go up to 40 million people. It's a lot of people.
It is a lot of people, and we need a lot of houses.
Yes. So the challenge is the government is trying these different things to help the housing demand, to help with the housing. But everything they're doing is just not working. And I mean, the Greens, they're saying, let's force the RBA to reduce interest rates and let's get rid of negative gearing. Reducing interest rates and getting rid of negative gearing is not going to actually improve housing.
No, but it's interesting that you speak to that, because I've had a few members reach out to me because it was recently on the news that the government's looking to wipe out negative gearing.
Yeah, let's talk about the elephant in the room, because a lot of people are probably scared out there, worried about negative gearing and what's going to happen. What happened was, back in the 1980s, Labor got rid of negative gearing. What happened? Rents went up in some cities 30%. So rents went through the roof. Property prices went up because rents went up.
Of course.
So it didn't help anything at all. Then what happened was Labor actually quietly put negative gearing back in because they thought, God, we just don't want to admit we got rid of it. So they
I
just
was
put
going
it
to
back
say
in.
quietly, of course, because they don't want to admit they've done it wrong.
Yep. Then Shorten, he wanted to get rid of negative gearing, and that was one of his election promises. And what happened? He got destroyed in the election. There's 2 million investors in Australia that are using negative gearing. They're not rich billionaires. They're average mums and dads, middle class Australia, right? The people that are working hard, paying big taxes, and they finally get a tax break for doing something, supplying housing to the average person, right? So the mum and dad investor, they're our unsung heroes. They really are, because they're the only ones that can fix this problem of having nowhere for people to live. Us
Yeah.
investors, our group, our community, we're the ones helping. We're the only ones that can help, or we're the only ones that help. The only thing we can do is get smart about things, invest in more property to give more people somewhere to live.
I like it.
We're doing a massive service, and it's probably, if you look at Maslow's hierarchy, the bottom of the hierarchy is food and shelter. We're literally helping people with the most important thing in their entire life.
Yeah, and it's a win-win because we're supplying houses and helping that housing crisis with the population growth, it's a win-win because you're developing your own wealth creation that you can then pass down on to your children and change that pattern when it comes to wealth creation and financial freedom. So it
Yes.
goes like hand in hand.
Yes, well, we're literally creating a legacy for our future generations because our kids and our grandchildren won't be able to afford housing. It's up to us to break that cycle and free them from that for the rest of their lives.
Mm-hmm.
So I really believe that the street smart investors out there, the investors out there, the property investors, you guys are the unsung heroes, and you're my heroes. You're true Australian battlers and heroes. And I've got a lot of respect and a lot of love for everyone out there working hard to create a better life for themselves and their family and doing it the right way. There's someone famous a long time ago. He said, if you can help enough people, that's how you become rich. And we're following that philosophy. What we're doing is helping people, and that's how we become rich. I love it. It's perfect.
I agree.
Yeah. So I think it's the perfect thing. Now, people that are scared about negative gearing getting taken out, one, it's not going to happen because it's political suicide for anyone that does that. Now, the Greens are going to push for it, but they're pretty stupid in general. And Labor, I don't think Labor are stupid enough to do it again. So what they did is they got Jim Chalmers, the treasurer, to go in and do some modelling. And then when they asked Albanese about it, he said, "Oh, I don't know anything about it." Blah blah blah. He pretended he knew nothing about it. The reason he pretended because he didn't want to touch it because it's radioactive. He thought, let's model it and let's get the name, get it out there, and see what people say. And as soon as people heard about it, people went nuts. So I don't think Albanese is that stupid, but then again, he did try to introduce the voice and other things into Parliament, so you never know. You know? Like he literally said, I'm going to introduce the voice. I'm not going to tell you all the details. Just vote for it. I'll tell you the details later. He really thought Australians were that stupid. So I'm hoping that we change government next year and that will be all good. But this is the deal. Let's say they got rid of negative gearing.
I was going to say, let's look at the other side of the scenario.
What's the worst case scenario they get rid of negative gearing? Well, guess what? Buy as many properties as you can now because they're going to have to grandfather your properties into the mix. And your properties will be worth a lot more. We're getting $80,000 tax deduction per property. So
correct.
If they get rid of negative gearing and you get 5 properties with $80,000 worth of tax deductions, you just got yourself a free $80,000 tax deduction because then you're competing with other people that don't have that. So you're way above it. So this is called insider trading. And if this was stock market, it'd be illegal. But because it's not the stock market, we can do it. So I say bring on, get rid of negative gearing, buy as many properties as you can now, negative gear them, and make all the way money to the bank. You're going to make lots of money. There you go. The best solution.
Sounds like it's going to be a win-win scenario for investors either way if you get into the market now, which brings us back to our topic in being able to get investor ready in the first 60 days, because this is important.
Good. Now tell me, what do we do? How do we get investor ready? What do we do?
So clearing bad debt, number one. I mean, this is really important because we want to clean up, reset, and obviously recalibrate. So when we're talking clearing your bad debt, like looking at credit cards, reducing your credit cards, finding ways to clear car loans, HEX debts, personal loans. Like these are the kind of bad debts that can affect your lending. So the great thing about having a mortgage manager in the circle of safety is that they can strategize with you and find ways and solutions to be able to reduce that bad debt.
Absolutely. And the thing is, what you want to do is you want to look at all the higher the interest rate, the worse the debt is. That's why car loans and consumer loans are the worst. And what you want to do, if you can, is consolidate them, get them into your house loan. You can get them down to 7% instead of 17%. It's a lot cheaper. The other thing is you don't want to pay interest on your credit cards. Pay them off every single month. Nothing wrong with having credit cards, but you need to pay them off every month.
That's right. You need to be really smart about it. Number two, so get clear on what your short-term goals are and plan for the next 12 to 24 months. So when you've got a clear plan of action, you've got something you're working towards. So in your clear plan of action, are you looking at getting one property? Are you looking at getting two properties? You know, alongside of that, what are the other action steps that are going to be necessary over that, 1 to 2 year span that's going to get you closer to that property goal? Does it mean getting connected with a property coach or getting your ducks in a row with getting the right players in the field, like your mortgage managers, conveyancers, your team of experts around you, like making sure that you've got the right people around you, you've got the right resources around you so that you can hit your short to long-term goals.
Totally. Move in with your parents. Get cheaper rent. Rent some of your house. Rent some of your rooms out. Airbnb something. Do whatever it takes. Because really, at the end of the day, what you've got to do is work as hard as you can, save as much as you can, so you can invest. And then once you start investing, then the investments can take over all the heavy lifting. But you need the momentum to get there first. That's the important thing.
Correct. And I guess step number 3 would be like really starting to get your ducks in a row. And as George was saying, getting your ducks in a row at the beginning of our live session tonight. So I guess getting ducks in a row are things like ensuring that you've got high enough income to be able to get a loan, figure out how much deposit you need for a purchase price of a property, what kind of borrowing capacity you have, and what kind of deposit you need for that. If you don't have those two metrics or you're kind of lacking in one or the other, looking at maybe a JV partnership or a guarantor, looking at superannuation, finding solutions, like thinking outside the box of how you're going to get to your goal of 1 or 2 properties in the first 12 to 24 months.
Save more money, sell some toys. You maybe don't need 3 cars. You maybe don't need a jet ski. Cut down on your expenses. Also, if you can't get a good borrowing capacity now, as soon as interest rates drop, go back in again and try it again. Improve the value of your home, fix the street appeal, get a high valuation.
I mean, we had one of our members, George, didn't he, that we actually sold toys. Like he had a lot of toys. He had jet skis. He had
a car. So I got him to sell his jet ski and a car. He had 0 deposit. He lived at home. He wanted to move out. And I said, don't move out. Stay at home. Because the banks, if you're living at home and you pay board, it's really, really increased your borrowing capacity hugely. So he used that. And now he's got over $1 million worth of property. Imagine this, from having nothing in the bank to over $1 million worth of property, making you money every week. Amazing difference.
Yeah, that switch in mindset of what the highest priorities were, toys, having fun, or setting up his financial future.
Now he can buy any toys he wants.
True.
But the funny thing is, he keeps wanting to collect more houses. Right? I don't blame him.
I think it rubs off on everyone. I think we all get into that habit. We tend to buy more houses.
It does happen. And, I'm a bit of a collector. I love buying houses. I'm building 120 houses this year. So I'm really going all in because I know what's going to happen to the market. The market is going to jump. And the one thing we need to be clear of, if whatever price you're looking at a property right now, in a year's time, when you look back, you're going to go, man, that was so cheap. I cannot believe how cheap it was. And that's what we've got to realize, because you've been there, Charmaine. Whenever you look back a year ago, how cheap were they? The year before.
I know.
But
Yeah.
next year, it's going to be even bigger. Whatever the price is now, it's going to be really cheap. Now, I think we need to go to our main group now, don't we?
I do. I think that we've pretty much covered the main ways to get yourself investor ready in the first 60 days.
Excellent. Well, I just want to say thank you to everyone for joining us. Thank you so much. We're going to go to our private group now and go into the nitty gritty and talk about how we're going to get ready, how we're going to get bargains. We're going to talk about new areas that we're investing in. It's going to be very exciting. If you want to find out more about our program, type in hashtag. What's the hashtag? Hashtag ducks in a row. Hashtag ducks in a row. And our team will reach out and to give you more details about our program. We're going to get going. Thank you so much. See you next Thursday. Bye-bye.
Enjoy.